Hey, what's up, guys? How's it going? Welcome to Unfiltered Mike. This is the new channel. Started it today. So we are just going gung ho at this YouTube. If you guys enjoy the content, leave some content, content comments below. Let me know what you guys think. Let me know what I should talk about in my future videos. And yeah, let's just get to it. So today I'm going to be talking about basically the foundation of life, interest. It's what everybody worries about. It's what everybody thinks about. It's always what's in the back of your mind. You're always checking the trading app while at work. I'm sure I'm not the only one. But yeah, so when it comes to interest, there's ways to go about it. You could hold your money in, say, a stock. You can hold your money in, say, a bond. You can hold your money in, say, a savings. So I'm here to give you a little talk about it today and, give you guys some financial advice if you guys did not know already. And, just chill through, stick through. I'll talk some market with you guys, tell you guys what's good buys right now, what I'm buying personally, what I'm holding off on, what I'm selling. So, yeah, let's just get it started right off. So, what I'm here to tell you guys today is basically, I'm gonna get straight to the point. Uh, is that you should always keep a little nest egg in your investment brokerage account. And what I mean by that is, having like a 20% position in government bonds. So I don't know if you guys have been on this brainwave yet, but basically when you hold a government bond, you're gonna be get paid in interest, like a savings pretty much, without the fee. Some savings accounts they have the fee, but they have the fee because they're a high interest paying one usually. So you got to look at what you're getting paid out by your savings, but sometimes you're actually better off just holding into your brokerage and buying government bonds, short-term bonds, like funds like SGov, which is on Fidelity. That's my trading platform, but I'm sure Robinhood has something going on for government bonds. I know that's a big one for you guys. The younger generation uses that. But yeah, what I'm here to do today is just tell you guys that you should be buying on government bonds and then holding a cash position so that way, not a cash position, but holding a position in there so that you're always earning interest on your money. And that's really what the number one principle to investing is always making sure you are earning interest on your money. And if not interest, you're just not depreciating your assets. That's the big game that we all play. So, when you get older, you're gonna end up probably buying bonds. That's how it usually goes. But right now you're young. If you're young, you're usually in the market all gung ho. But I'm here to tell you that you shouldn't be full gung ho, surprisingly. And you'll see videos of people saying, well, time in the market beats time out of the market. That's completely true. I agree with that. But on my side, I do have some experience in the market, and I'm here to, preach to the youngins what this experience has taught me. So, yeah, buckle in and I'll go through it. So basically, when I started investing, I started in COVID. And so anything was a good buy in COVID. I bought some Macy stock. I didn't know what I was doing at the time, but you could have bought anything during that COVID dip and you could have made money. So that's when I first started. I was throwing all my money in, and then as I continued, I kept throwing money in. Well, sooner or later, we got to 2022, and I'm still throwing money in then, and the market starts dipping. And then you look around, and then you're like, shoot, if I had a cash position right now, I could have bought in at the lows. Now, I'm not telling you, you have to sell at the highs, buy at the low bottoms, but you will know when the market is mispricing something. You could watch videos. You could just look at the overall market trend too. Just look at the S&P 500 and that will give you a really good gauge. So, yeah, so what happened in 2022 is basically the market dipped. And when that happened, I was holding positions and it would have been nice to have a 20% position, not in cash, but in government bonds because it would have been consistently earning interest. Sure, you might miss out on some stock gain, but at the end of the day, when the market dips drastically like it did, which is likely going to happen with this semiconductor trade going on, I'm not a bull here, but I'm here to give advice to you guys about, how to be safer with your money and how to be set up for positions to gain. And so what I would do is personally keep that nest egg and just be ready on the sidelines for when times like this arise. And just, you'll notice when like the market's mispricing, you'll see like, oh, that's a good company. Like, why is it trading down here? And these are like things you start to learn after a couple of years. You're like, oh, Microsoft usually trades at 500. Why is it down to 4? Like we use this every day at work. Like this just shouldn't be happening. You can argue the capex spend and all that stuff over the Mag 7 stocks, but at the end of the day, these are reputable companies to me. And that's how I invest. I look at what I use and I look at the numbers according to PE. And that's my big takeaway. And these semiconductor stocks, everybody's buying in, and I'm just starting to get like a little skeptical. I don't know if you guys are, but like I'm just starting to get a little skeptical of that trade. So I'm starting to like look out. I'm starting to like really go into like what the value positions are. I'll drop some names right here. Mastercard. That's a big name that a lot of people like right now. Mastercard, Visa. Stuff you use every day. Like there's no way. Even if we got blown up, everybody's still going to be using their credit cards in America. There's just no way. So I'm just buying the safer names, and I don't know if this comes with getting old or this just comes with what I've seen in the market. And I'm at like a young age. I'm at 22, and I'm not just buying like safe financial stocks. Like I'm also buying Netflix right now, and I'm loading up on a little bit of Nvidia because it's starting to trade a little low. If you guys haven't been looking at that, but yeah, this is like the stuff you start to notice. But what I'm here, let me get back to what I'm trying to say. Basically, you want to keep that nest egg ready and on standby for when times like when the market really dips, it gives you the opportunity to buy in. It doesn't have to be a crazy position. It could just be a couple $1,000s, couple $100 if you're just starting. But that will go a longer way than anybody can ever think. Because I remember when my positions during 2022, they almost went down 40%. And when you first start investing, you might catch like a nice wave, 20% on the first year. I got 40% and that basically wiped all my gains. And it took a little bit of like my own like principle out, like what I had down before. So, like it shakes you a little bit. But then again, those are the times when you buy and you just buy the names that are at those 52-week lows or just the names that you trust that will come back, big names, Amazon, Mag 7 type stocks that aren't going to go anywhere. And that's where you make the real gains is when those dips come. And what I'm here to tell you guys is keep that nest egg, keep something for when this market dips. It might not be dipping right now, but there is a major sell off in the big names. If you guys haven't been watching the market, but yeah, just keep it ready, keep it good to go, and you'll know when it's time to buy. Everybody acts like you gotta watch, like every single ratio, all this jargon, financial jargon. No, at the end of the day, you'll know when the market's collapsing. You'll see your portfolio. You'll see everything going down. You'll hear something stupid some politician did. I'm not political. I don't give a shit what goes on. At the end of the day, we have no control over it. We're just a ton of bodies in the system. But, when it does happen, I want you guys to be primed and ready because the end goal for me is to retire early or just not have to worry about money. And that's what I've been working my life for is I don't want to have to deal with this stuff, watching the market all the time. But you're just going to know. You're going to know when these times come and you're going to be ready and you're going to hold that nest egg. And that is going to that's what's going to set you apart because those gains in those dips are more significant than buying at all-time highs, like which we are currently at in some positions. So I hope you guys have something to take away from this video. You know, buying government bonds, holding government bonds, waiting for those positions to arise. And they're easy to liquidate too, which I forgot to mention. They're easier to liquidate than say a savings, which, may take, 2, 3 business days to clear and then hit the brokerage account. You already have it in the brokerage account, so you just sell and then you buy. So you'll be ready for those dips when they come. And you're not holding cash, so you're earning interest, which is the main takeaway is you always got to be earning interest and paying off the high interest. And if you do that, you know what you're doing and you'll be all right. But anyways, I hope you guys have a good day. Have a good weekend. That's always big. 4th of July just got done. Made some great ribs. But yeah, you guys have a good one and I'll see you guys. Let me know what you guys want me to talk about next.